I'm shocked. I had to do a double take, and it takes a lot to surprise me. I took a look at my last video that I did on Wednesday. I took some time off, so my last recording was on Wednesday, May 21st, and the opening price on May 21st when I did that video, the SPY closed at, it opened at 588.47, and I thought I would take a look at where the SPY closed on Friday. It closed at 589.47. That means that the S&P 500 has moved 10 points since I did my last video a week and a half ago. Now, I expected that we were going to have some very light trading. We had the Memorial holiday coming up, really light news cycle. And so I took a look back to see what had transpired over that time. We had NVIDIA earnings. The initial reaction to NVIDIA was pretty positive. Stock opened higher, but then eventually it gave back all those gains. So let's start there because it is a mega cap tech stock. And there you can see the gap up that we had on NVIDIA, but the stock has closed basically where it was before the earnings announcement. No net effect. We did have GDP came out minus 2.2%. So that was a little bit better than the minus 0.3%. PCE came in a little bit. There really hasn't been a lot of news for traders to sink their teeth in, but that is going to change this week. We have ISM manufacturing on Monday. We have ISM services on Wednesday. We have ADP on Wednesday. We've got JOLTS on Tuesday. We've got initial jobless claims, which I did actually take a look at last week's initial jobless claims to see if they've been ticking higher, and they had. So we had 240,000 last week. That's a fairly high number, especially when you factor in the holiday. Most unemployment claims are not filed during a holiday shortened week. People tend to postpone it. But yeah, so that was a little bit of an uptick. The net effect for the market with any news, tariff this, tariff that, China this, didn't matter. The market didn't do anything. And so typically what you'll see when you have a holiday is the day or two before that major holiday, you're going to see very light trading. Traders aren't going to stick their necks out. And so Memorial Monday, when you come back Tuesday, you've got what I call a holiday hangover. Again, not a lot of price action, not a lot of movement. It's kind of what persisted the last 10 days. Very difficult trading conditions. I suspected that to a degree, but not that the S&P would move 10 points. I thought it would move at least more than that. So I didn't give you a long and I didn't give you a short. I had mentioned to you that the market really is pretty neutral in here and no news to drive it. So I'm going to take a look at the daily chart, and you can see that the SPY had a gap down on May 23rd, and we checked the 100-day and the 200-day moving average, which now have completely converged. That also lines up with this horizontal was resistance level is now support level. So this has become a really big support level, and you can see the open was roughly 576, let's call it. So that 575, 576 level, major support. But you'll also notice that we had the test that we were looking for. And this is something that I had mentioned in my previous videos, that when you get a breakout like this, it would be very unusual for the market not to test that breakout. How the market tested that breakout was going to determine what my bias was. I have been bearish. If we tested this support level and bounced right off of it, I would have to shift to neutral. I'm simply looking at the technicals. And the technicals right now are telling me I need to be neutral. I can't be bearish in here. If there were a lot of sellers out there, we would have seen that level fail. We certainly would not have bounced off of it like we did. So I'm neutral right now. This is the move that I was looking for. That was the reaction. Big pop right off of it. As I'd mentioned, if we had long stacked red candles, and we blew back through it on the downside, that would have told me that this move was all mechanical. It was lots of short covering. Didn't happen. So buyers are somewhat comfortable with what's going on. So what's happened this year? We had a big drop and we had a big bounce. So we're basically a little bit lower than where we closed the year. This is a very neutral setting. So I'm going into neutral mode here. The other thing that I will say is that now that we have spent a lot of time above the major moving averages, it becomes support. So this is no longer a mechanical breakout to the upside that lures in some bullish speculators and then the door gets slammed on them. That scenario is not going to unfold. Sellers didn't pack enough punch to drive the market back below this level. That tells me that buyers are somewhat interested. You can see the market has also not been able to take out this high. So sellers have some say as well. There's some resistance. All told, I'm neutral. I have no bias here. I don't know what the market's going to do. It's all news driven. We've got a lot of economic news coming out this week. So we'll see if any of those numbers influence the market. But overall, from a technical standpoint, I don't know if the market's going to go higher or lower. So I'm going to give you a long and I'm going to give you a short. And the one takeaway from this kind of market is that you should not be placing big bets or big trades. Any type of price movement that you get, you're almost looking for that initial move to be very wimpy intraday, and then you can play the reversal. Doesn't matter, long side or short side, you're looking for that wimpy first move, and then you fade it. That's how I would be trading this market this week. Are any of the numbers going to really have a huge impact? We'll see. My big number would be ISM services, and if that continues to tick down and it gets down to the 50 level, that's going to be a sign of contraction. If we start to see the unemployment number tick higher, the unemployment rate, that would also be somewhat problematic, but it's been very, very steady. We've seen the initial jobless claims coming in around the 225 level, 230 level. That's consistent with full employment, it not really changing much this week. So I don't know what driver we might possibly have. We'll watch the economic releases and hope that we have a breakout. So if I draw a line across the top here, you can see that that resistance level somewhere around, call it 596. We know we've got support at about 576, 575. So we're going to stay in this range until we have some news to break us out. Until then, we lay low, we wait for the breakout, we wait for the follow through, and then we'll have another trading opportunity. I don't know when it will set up, but this is about the best news cycle this week that we're going to have for a while. So I've got a long for you and I've got a short for you. We trade the market, but we ride the fastest horse. We're always trading the market. So the two trades that I'm going to show you today are based on market movement. If we get that wimpy first move of the day, and let's say that it's to the upside, and that move stalls out, resistance is in place, and the market starts to show us signs that it's going to roll over, that's when you would take a position in the short that I'm going to show you, as long as that short is struggling to advance with the market. Because as soon as the market rolls over, that short is going to provide you with a nice trading opportunity. Let's say that the first move of the day is to the downside, and it's a wimpy, choppy little move to the downside. That tells us that we're going to be focused on trading the long that I'm going to show you. As soon as that wimpy market move starts to find support, we know that we're going to get a move higher for the market. And because this stock has showed relative strength early in the day, As soon as the market finds support, the stock is going to take off. That's how we get all the odds in our favor. And you might have to wait an hour or two for that dang trade to set up because there's nothing going on. If you force trades in this environment, you will lose money. If you chase hot stocks right out of the gate that have good volume, that are stacking green candles, you're going to pay the price because you don't have market momentum. You don't have a market tailwind. So please don't do that. So I'm going to go into a bullish search and a bearish search. I'm going to show you two stocks that I like. So wimpy first move of the day for the SPY is to the downside. Let's use that scenario. So we get this choppy little move and you get a little drop like this. Okay, market starts to rebound. In here, you're back above the prior low of the day. In here, that's your sweet spot. This is where you would find a really nice long to trade. And you'd have to wait 4 hours for this trade to set up. But if it means you got to wait 4 hours, you got to wait 4 hours. So here's a stock that I like, PLTR. Let's go into the daily chart, see what's going on there. You can see that it's had a tiny little drift lower. It found support at AVWAP-E. So this stock came up on my heavy buying search, and you can see how it's going to try to break out through this horizontal resistance level, this big compression right in here. Go into the 5-minute chart. Classic example of what I just explained to you. You come in, you see stacked green candles on heavy volume, you get all hot and bothered, and you plow into the stock. Oh, this thing looks great. And then the rug gets pulled out from under you. And now in here, when it crashes through VWAP, you exit for a loss and you're wondering what the heck went on with that dang trade. Well, you didn't have the market supporting you because look at that market drop in here. You had a big market drop. PLTR dropped with the market, so you had to wait for that first market move. As soon as the market finds support, market starts to recover some of this long red candle, and you get right here above VWAP. Okay, I'm feeling pretty good about this right now, and I have a stock that's shown heavy volume early in the day with a great D1 chart. So now I'm looking to buy PLTR somewhere in this 126 level. Stock rallied 5 points from there. Yes, you had to wait all damn day for the trade to set up, but you did have a trading opportunity and a really nice one. So PLTR, wimpy first move for the market lower on Monday. Let the market find support. Watch for relative strength in PLTR. When you're starting to see those signs of support, this stock wants to move higher. I love the volume that you saw on Friday. Really nice stuff, but you got to be patient. Do not chase. So let's say that the market is in a wimpy rally out of the gate on Monday. Mixed overlapping candles, light volume, news pending later in the week. Traders really don't care one way or the other. They're going to test the upside with those buy programs. And as soon as that move falters, you're going to get a pullback in the market. It's going to test the downside. So if you've got a stock that's been relatively weak on a D1 basis, it's going to roll over and sell off when the market rolls over. So let's go into our bearish searches and take a look what we've got there. I'm going to go into red royal flush and I'm going to look at CAVA, and that is going to be your short. And you can see how the stock had weakness on Friday. It sold off, and then yes, in the last 2 hours of trading as the market found support, it recovered. This is pretty much what every stock is doing. So why do I like the D1 chart so much? You can see that post earnings, the stock hit resistance at the 100-day moving average, that blue line, and it's been selling off ever since. It's down below AVWAP-E. Tiny bodied compressed candles tell us that the stock is not going to move a whole lot, but you can see how it's consistently making lower highs and lower lows. Nice. There are sellers. So let's go into the 5-minute chart. Take a look at that one more time. Guess what? Heavy volume, decent volume. That tells us institutions are involved. So we've at least got that institutional selling pressure that's still there. As soon as the market starts to roll over, this stock is going to be weak. Let's see if we had a sell-off. Here's an example of a gap up on Thursday. You can see how the market sold off. Well, CAVA, I'm expecting, yes, it had some decent weakness in here during the day. You're not going to get a big move out of this stock, but it's going to be pretty consistent. Seeing a little bit of weakness in Chinese stocks. You can day trade them. I would not overnight swing trade them. Dow has been relatively weak, so you can also take a look at a similar pattern on that stock. This is the routine that you should be going through and finding your stocks with relative strength and relative weakness. Then you watch the market intraday, you wait for that wimpy first move to exhaust itself, and then you're looking to fade it with a stock that has already been showing weakness. So Dow looks pretty good on the downside too, but it does not move very much. So it's a $28 stock. Maybe you get 30 cents out of the move. Set passive targets. This is not a time when you can expect that you're going to get on a runner and that you're going to make a huge gain on a sustained intraday move, because nothing's really moving like that. The market is not giving you that tailwind. So that's how I trade it. I am shocked that the market has not moved more than 10 S&P points in the last 10 days. So when I came in, turned on my screen, I thought, okay, I'm going to have some price movement to evaluate. This has probably got lots of news, probably had some decent movement. Nothing. And that's a sign that we need to really keep our trading to a minimum, and that we need to wait for a breakout below 575 or above 596. If we get one of those two moves off of the news this week, then we've got something that we can latch onto, and then institutional traders will be in there, and then we can start to expect some sustained moves. But until then, we're just going to chop back and forth. Thanks so much for watching. If you found this content helpful, please give it a thumbs up. I'm going to try and do some short videos through the course of the week, but I need some movement to do those as well. Otherwise, we're dead in the water. Trade well. We'll see you then.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.